Trading is one of the most lucrative online careers, but for most of us, the shinier it seems at first, the more depressing and traumatic it becomes along the way. This is a career where you will learn a million things, but in the end, will need and rely on only one to succeed. Even then, you will often be proven wrong for believing that you cannot lose money. When we start trading, we dream of the trading lifestyle portrayed by trading influencers on social media and how easy it is. While the reality is, if not the only one, it's definitely one of the hardest jobs in the world. Trading is something that is completely against human psychology because as humans, it's our basic instinct to avoid dangers or get away with things without risk. To become a trader, you have to desensitize that part of your brain that tells you to be careful and not choose a dangerous path. Trading is similar to extreme sports, knowing and accepting the consequences in advance but taking action anyway. As a trader, your job is to minimize what you lose and maximize what you win. Notice I said minimize and not avoid because you can never avoid losing money in this game. Your win rate is inversely proportional to your risk to reward ratio. The funny thing is, a static risk to reward ratio is only realistic on paper, not in execution. In execution, risk to reward ratio evolves during the trade, and only holding your winners for longer works. I have been very stubborn in trying to make money only from trading and doing it as the only way of earning a living because I had decided a long time ago that this was the only thing I could do for the rest of my life. I had a firm belief that one day I would be glad that I chose trading as my primary career. Plus, I have been very good at picking up cues and connecting dots. So I had a firm belief that trading would work for me, but I didn't know when or how. My first introduction to forex trading was back in 2013, and I have been a market participant by demo trading or a trader by trading live whenever I had the money to fund an account. Around the time I started, there were very few trading channels on YouTube, but I learned a few basic strategies like moving average crossovers, RSI, and so on. I also learned the Asian range breakout strategy. Fast forward to 2015, I started a part-time job in a trading service related company. We used to provide technical and fundamental analysis to the brokers and individual clients. If you know about Trading Central, that kind of stuff. During all this time, I wasn't absent from the markets. I was learning and combining candlestick patterns, trend lines, and chart patterns. By combining price action patterns with trend lines and basic support and resistance, I had 9 green months trading GBP pairs in 2017 and flipped my account many times. At that point, I was so confident in my strategy that I thought I had figured it out completely. You know, there always comes a point when every strategy stops working. Yeah, it came right afterward. The first and most critical problem in trading is that as soon as you start getting confident in something, it stops working for you. It may stop working for technical reasons or you just stop being lucky with it. 4 to 5 years into trading made me fully aware that there is much more to trading than just chart reading skills. Then I stopped learning more about charts and started listening to the Chat with Traders podcast, which shifted my focus from watching people drawing lines on charts to real traders talking about their trading journeys. A problem from then I want to share that I am sure most of us experience is that I used to let everything run without taking any partial or full profit because I was just like a normal undercapitalized beginner trader. Imagine going a trade 700, 800 pips in your favor and getting closed on break even. So basically a break even trader. I had been a break even trader for almost a year. You know, when you are using a 50-cent lot size, even 800 pips in profit don't really mean anything. Considering the fact that you have been holding that trade for over a month or two. Meanwhile, I was also publishing those trades as signals for others. At the end of 2018, the same company I had been working for since 2015 launched an EA. It was based on a martingale strategy and worked best on cable GBP USD. I had a day job at that time, so I was happy with it, as for a few months it generated plus or minus $300 on my $3,000 account. And then came the Brexit in 2019 which blew my account. I was also trading manually here and there. You can see the transactions on my FX Pro dashboard that go back to 2019. At that point, I had already looked into nearly every trading strategy except Elliott wave theory and harmonic patterns, because I was always right about one thing from the start, that the easier or simpler your strategy is, the better it will work. In 2020, I started freelancing on Upwork and Fiverr with only trading related services, and it turned out great. All that knowledge about trading acquired over the past 5 or so years helped me a lot to write about trading. Since then, I have produced over 1200 pieces of content for different individuals and blogs, including your favorite crypto exchange, CFD broker, or trading influencers. Introduction to asset classes, broker reviews, trading strategies, expert advisor codes, how-to guides, YouTube scripts, you name it. And there is literally a 99% chance that I have produced something around that particular thing. On Upwork alone, I made over 10k just by providing trading signals to a Romanian fund. First, I was providing them with 2 signals per day, one on gold and one on Euro USD at the London Open. Then I started progressing, and at one point, I was providing them with 6 signals per day, which of course boosted my confidence. Remember when I said that I am a firm believer and also very good at picking up cues and connecting dots? This was the point where I summarized all the information I had and realized that there is a strong connection between market movements and timings. And from the cues I had picked along this journey, now is the time to develop my edge around only these 2 things. I would like to highlight something about authenticity in the trading space. How many people actually share their struggles, tell the truth, or be honest about their trading journey? Not many, I think. I laugh when I see 20-year-olds claiming to have been trading for 7 years and they have no record whatsoever that could back their claims. Also, there is quite a possibility that I wrote that ebook or course you have bought from your trading mentor. It's because I have made over 200k in 4 years just by writing, doing SEO, and brokering backlinks and guest posts around trading space. That is the harsh reality of this trading influencer space. It's easier to make money from providing trading services, teaching, mentoring, and content creation than actually trading, which is why you see so many trading influencers these days. When they pretend to make profits by trading from a phone on a beach, they disrespect the people who have been in front of the markets 12 hours a day for years and have put hard work into it. Also, making trading look easy is the worst thing you can ever do to a beginner trader. These guys realized it in the first 2 years of their trading career, which took my stubborn ass over 6 years, that you can earn more from providing trading services than actually trading. Maybe it's because I kept banging my head against the wall hoping for a different result every time, or maybe I didn't consider it ethically right to become a trading mentor or trading influencer. I still don't consider this the right approach. Sometimes I feel bad that the course I wrote and sold for $1,000 is being resold for $5,000 to individuals by some of your favorite trading influencers here on YouTube. Not because I made only $1,000 and not $5,000 per copy, but because the people who are selling those courses don't even understand the concepts they are selling. I never jumped on the bandwagon or trends, but I am a quick learner and I looked into nearly everything trending in the trading space, either for learning purpose or to create and sell content around it. And I have seen most people doing the same thing. Let me elaborate. From 2013 to 2017 or 18, candlestick patterns, basic chart patterns, trend lines, and divergence were popular concepts taught by price action trading influencers. Also, trading blogs, YouTube channels, and service providers were pushing that content. I used to write about those topics because then they were in demand. And now, for the past couple of years, ICT concepts have been in trend. In the same way, I write ICT content for people because now they are in demand. My point is that course sellers and trading mentors always have to either plagiarize old information or rebrand it. I saw people's interest shifting from pin bars, head and shoulder patterns to trend lines, wedges, and flags. And from there, supply and demand, harmonic patterns, Fibonacci, and Elliott wave theory. Do you really believe that institutions and banks put hundreds of objects on a chart to find out whether they are gonna buy it or sell it? In addition, ICT concepts have the highest search volumes because of its cult-like following and resharing techniques, the same digital marketing techniques used by Andrew Tate to go viral. Get people into your cult, teach them something, and ask them to not only share what they have learned, but also resell it by starting their own mentorships. On top of that, Everyone is trying to take his piece of it by reselling those concepts. The popularity of these concepts even compelled the brokers to push articles around ICT concepts. This guy is a marketing genius, I'll have to admit, but we will see when new things take the place of ICT concepts. I have already witnessed 3 trends emerging and dying in this content space of trading during the past decade or so. Even if the concepts work for anyone, none of it is new or proves anything. The first thing is that it's your years of market watch and learning that converted into discretion that is currently making you money or maybe luck. The second thing I understand is that using ICT gets you views, so you have to pull your titles, thumbnails, and content around those concepts. What I am trying to say is that rebranding, demand and supply to order blocks, support and resistance to buy side, sell side liquidity, imbalance to fair value gap, false breaks to liquidity traps, structure breaks to market structure shift, and so on, doesn't mean they are new concepts. It just means a new cult leader started using fancy jargon while paper trading for existing concepts, and now everybody loves to use them. Now, why did I specifically mention it? Well, it's because there is a 99% chance that your favorite ICT trading influencer or YouTuber is reselling you something written or produced by some freelancer or a ghost content creator like me, who doesn't even use them. In addition, popularity doesn't mean authenticity. And don't forget about people faking statements, faking profits on accounts from affiliated prop firms or brokers, lying and getting you to pay for challenges from their discount codes while knowing that the prop firm or broker doesn't pay people, or in the worst case scenario will be gone one day. I'm not here to throw dirt on anyone or bash anyone. However, you should not start any teaching or mentoring program unless you have a positive verified portfolio of at least 3 years, and be honest about your trading history. Like other content creators, I learned everything while researching so that I could sell it as a freelance content creator. But the thing is, if you are able to remember or write a concept, it doesn't really mean that you can execute it as well. Plus, we don't even use all the knowledge we have on anything. Take rocket scientists, for instance. Do you think the person who converted a draft into an official document by proofreading formulas and shit can also build a rocket on his own, even if the resources are provided to him, let alone launch the rocket? Never. Not everybody can learn or do everything. I think you are getting my point. Over 70% of trading accounts from CFD brokers and online prop firms are B-book accounts. So how do people have the nerve to introduce themselves as 6-figure or 7-figure funded traders? If you think we retail traders can move the markets by participating with our tiny accounts, then try turning on the sentiment in your C trader, and you will realize that 99% of the times, whenever the retail sentiment bar shows that the majority of us retail traders are selling, the market goes against that visual sentiment. How is it so? Well, simply, millions of tiny retail traders like us provide liquidity to institutions and banks to execute their trades. It's like a single actual buy order from a bank can eat thousands of retail traders for lunch. For many of us, what we are staking would be our yearly salary or even life savings. But for the bank, it's just one small trade among hundreds of other trades executed that day. Essentially, we are liquidity providers. So first, I believe you should lower your ego and admit that we are not and can never be the market movers or market makers. We can only bet on our understanding about what the banks are doing. While trading markets, it's not important to know why anything happens. The only thing that matters is how we react to it. It's amazing to see when people claim that the market moved because of this reason or because of that reason. More analysis doesn't increase your chance of winning, but it definitely increases your emotional attachment to a particular trade. In summer 2023, I started prop firm challenges and immediately started to fail until I lost over 10k in prop firm challenges without securing a single payout. I lost so much in prop firm challenges for 2 reasons. One, I was overtrading and having losing streaks. 2, my father was fighting cancer and I used to be very busy with him. Plus, my only son was diagnosed with a rare genetic disease. Going back and forth to the hospitals for either my father or my son also kept me distracted and depressed. I barely slept comfortably for a year. In that situation, I should have sat back for a while away from the market. This could have saved me money that I threw on the prop firms. I also had 3 rejected payouts from prop firms, which broke my heart a little bit because I could bring my spending to payout ratio to break even if I had gotten those payouts. But I'm not a complainer or a person with a victimhood mindset. I completely understand the risks of this industry and did it anyway without any conviction or guilt, and still do it to this day. Another worth mentioning point here: practice doesn't make perfect, practice makes permanent. It means practicing anything becomes a habit, whether a good habit or a bad habit. In 2022 and in 2023, when I was trying to swing trade, I began to go against trends. For example, I could be right that the market is about to reverse, but meanwhile, I will place and lose 3 to 4 trades without any signal or gut feeling or anything before the market really goes in my direction and gives me insane risk to reward. I'm talking about 15 hours or 20 hours. Those experiences convinced me in a way that, hey, what you are doing is right and your win rate is actually less than 20% and yet you can rely on it. While the reality was, I was trying to find tops and bottoms with no rhyme or reason and getting lucky in the process. That created a bad habit in me, which is being okay with losses out of carelessness, because essentially those losses were from my negligence. I wasn't reading price action or anything. I looked at the daily chart and placed limit orders, saw the price, hit my stop loss, and repeated until I got lucky. Being reckless was a habit which ruined my mental health. Losing 10k in challenges and getting my payouts rejected, and also being okay with literally all of it, destroyed my mental health. At that moment, I became conscious of this stupidity. I stopped trading for almost 3 months. I started researching and looking at old trades and saw that I was right in direction but wrong in timing. Which brings us to the discovery of my edge that I found by combining timing and my implicit memory. I believe this is the last anchor point of my learning curve in finding a trading strategy that best suits my personality, because not everybody can execute every trading strategy. The mistake people make is that they start trying strategies that only align with the person's psychology who introduced this strategy to them. When a person spends time finding his edge reflects his personality. He has confidence in his edge and he has seen it working. However, when he learns something new that works for someone else, he cannot have the same level of confidence while execution. I think this is the biggest catch in trading. I work from my home office, yet I only need 1 to 2 hours of screen time daily to trade efficiently. I cannot verbally describe a pattern or something as my signal, but to put it simply, I only buy gold during or right after the New York session, if I feel like it. There are proper reasons and rules for why I am only interested in buying gold in all conditions, bullish, bearish, or sideways at a specific time of the day, which I'll share in a separate video while describing my strategy. My strategy doesn't require the concept of support and resistance. Therefore, you will never see me doing complicated technical analysis, spamming my charts with objects, shapes, or text, or predicting anything. I will always describe my entry and exit reasons in simple, plain English without using any fancy jargon. If you have been watching markets for years, chart patterns and market movements become part of your muscle memory and subconscious. You may interpret them however you want to in words, but you can never explain them in detail or accurately. If you could, you would have coded it into an expert advisor and had made millions of dollars by now. But you didn't, which means it's not the chart reading skill or pattern recognition that makes profits. It's the intuition and discretion to execute and desensitizing yourself from the fear of losing to avoid stupid errors. People may claim to be successful mechanical traders, but let me tell you, if you have been a mechanical trader for over 5 years and you are now consistently profitable, yet you cannot verbally describe the actual reasons for doing anything or code your strategy to trade itself, you are not a mechanical trader anymore. You are a discretionary trader. You can admit it or not, doesn't really matter. Obviously, if you are a trading content creator or influencer, it's in your best interest to pretend that you understand what you're talking about in your content or while teaching or mentoring, or simply teaching something you don't really trade yourself. I don't want to follow trends for views, therefore You will never see me making trading strategy videos, seconding or bashing a popular trading influencer, or becoming the trading police, which basically means trying to pretend as a saint by exposing this and that trading influencer while simultaneously making a living through ad revenue or affiliate marketing for prop firms or brokers. I'm not gonna spam you with everything you already know about chart patterns, candlesticks, timing concepts, and so on. Plus, I am very against backtesting or trading on replay from the left side of the chart. The reason is that you cannot replicate the exact win rate and risk to reward ratios on the right side of the chart in real time. So I don't believe in win rates, and I certainly don't believe in risk to reward ratios, because practically both of them evolve over time and during the trade. This is the reason every service provider, forecaster, salesman, or analyst has this notorious risk disclaimer that past performance does not guarantee future results. It's just like the warning on the cigarette packs. We humans are interpretation machines, and analysis is an individual's interpretation of charts under the influence of his apophenia. Apophenia can be described as seeing an elephant in the clouds or convincing yourself to see what you want to see, not what is actually there. In my opinion, technical analysis is a pseudoscience just like astrology. So either it will be execution of trades or struggles of trading. No strategies, no fancy charts or flashy stuff. I've thought of quitting trading numerous times, but I had a firm belief in myself that told me to keep going and keep doing it, and I would figure it out one day. I understood the risks of this career. I completely understand that trading is not one of your normal jobs. It's not something that you would do for a month for a fixed paycheck. Although, just like many people today, I have made 10 times more money from trading than I lost in trading, and that is the reason I am still confident that I am very close to my consistent growth. Another thing I want to admit that I don't come from a lower middle class family background, and as the youngest among my siblings, I had the least responsibilities, and I already had the security of failing repeatedly, yet having the inheritance from both of my parents' sides in the end. On top, I have a father figure type of elder brother who trusts me and lets me do whatever I want with my life. He supported me for years when I was struggling and still support me just like every beginner or struggling trader. I literally begged people during all those years to give me money so that I could trade. I think you don't understand things until you grow old. Now that I am in my mid 30s and have seen people killing themselves because they were deeply in debt, I am specifically talking about the trading industry. I thank God that He didn't give me that opportunity then. You get everything on its time. It's like it was not my time then and I wasn't ready then. But I think I'm ready now and I also have the resources. The other thing is, I don't want to pretend like an expert or even consistently profitable trader out of imposter syndrome, which is seen among most of the trading influencers. And I don't even want to pretend or consider myself a trading influencer. I am just a regular trader who just wants to share his journey and experiences honestly. Because I am not gonna start any community or sell courses or anything. I just want to share my stories instead of becoming another trading influencer selling a course or dreams. Trading is not just about technical analysis or even clicking bid or ask button. It goes deeper into one's personality and nature. It's like you have to grow your personality to do one thing and one thing alone, trading. And it also translates into your other aspects of personal life. It's because how you do one thing is how you do everything. So, if you are impulsive, hyper, emotional, or reckless in your personal life, you will be doing the same shit in your trading. I believe that sometimes people have to change their whole personality to succeed in this career. Take me for example. Before my 30s, I was this hasty, short tempered, and hyperactive person. Honestly, I had to change myself completely. After over half a decade of reading nearly all psychology curriculum and listening to psychologists, high performance coaches, and therapists, from this thin chain smoker, I became a distance runner. From the rudest person in the family, I became the funniest. From this self hating person with low self esteem, I became an online therapist. From this useless, jobless person, I became a successful freelancer. Less by effort and more by luck, I have to admit. But all those things don't seem struggles to me anymore. I believe they were the things or catalysts that helped my growth and transitions. At the end of Deadpool and Wolverine, there is a scene where Deadpool asks the TVA if they could fix this Logan variant's universe or make things right in his past. To which she responds that all those things made him the person who saved the world. So there is nothing to fix in the past, only lessons. People share their success stories, and I'll share my mistakes and struggles so people who listen to me don't have to make those mistakes. I have witnessed catastrophic events in markets live. I saw when Swiss franc broke floors and brokers filed for bankruptcy, when Japanese yen went crazy after a negative rate cut, and when USD went crazy during the 2016 election when Trump won. And of course, who can forget the 2500 pips on GBP pairs during the Brexit and the latest catastrophe, which was pandemic. I have blew many accounts. I have flipped many accounts. Once I had a break even for a whole year, did all sorts of crazy shit that you can ever imagine in this industry, but it was totally worth it. I believe those experiences made me what I am today. It groomed me, it helped me grow as a person, and I believe every trader who doesn't give up and keeps going ends up like me. My goal for creating trading videos is to share my trading experiences and use this playlist as my trading journal. I also want to avoid pushing BS content with catchy titles and thumbnails with fake profit screenshots or exposing people in the name of greater good just because it will get me views, let alone convert my audience into sales of courses or affiliate marketing for anyone. I think everyone should be a responsible adult and research before buying anyone's course or in fact anything. And even if I start exposing people, there will always be frauds as long as there are greedy people in this industry who want to make quick money. Isn't this the sales pitch of this trading industry? Making this many thousands in so and so hours or days. I have provided therapy for free on Instagram to over 1,000 people in 3 years just to learn real and practical psychology. Never did a paid promotion or monetize it in any way. Never acted like your casual influencer, and even now I create content that I want to and whenever I want to. Not what people want to watch or not what the algorithm wants. I just wanted to help people and simultaneously learn from their experiences. If you are still watching this video, it most probably means that even after years of listening to presumably winning traders abusing your dopamine receptors by complicating their analysis, you have not seen it going any better. I'll be here for you as an honest trader. Bye.